monetary policy around the globe, and it's not just the US central bank, has been very favorable to people buying and holding stocks. They have literally been propping stocks up since '08 with just a sheer amount of liquidity, keeping interest rates low. That invites buybacks, share buybacks, epic buybacks. And I think that's kind of what you and I are talking about here. So kind of going back to, there's always opportunity. If you keep a pairs trading mentality, a Forex trading mentality in mind, I'm always buying something and I'm selling something else. In the equities markets, think about it as water. You know, water is going to go somewhere. If I just dump a lot of gallons of water, it's going to find a way. It's going to find a way to move forward. And if it doesn't, you know, eventually it's still going to win. So I look at the equity markets in that regard where, so just because the market's, you know, kind of, there's an outgoing tide on one side of the market, there's another part of the market where there's going to be a nice incoming tide. And I think it behooves traders and investors to understand that flow, because there's always going to be opportunity. There's never, one time in my entire career, in 32 years, I went to cash and I regret it. And that was in '08. And I said, I'll never do it again, because if I had the mentality of always looking to be on the offense, always looking to air the ball out, I would have seen there was opportunity, not to pick the bottom, but in markets that were more resilient in a relative speaking way. So now I always say there will be somewhere that I can put my capital that's going to be more resilient, and I don't have to panic with everybody else, because that panic's going to give me opportunity.
Thanks for watching this RTD interview. Don't forget to pick up your RTD Scary George round, only available at stbullion.com. Now enjoy this interview. Welcome to this RTD interview. Today I'm excited to have first-time guest, Ms. Raghee Horner. She's the Managing Director of Futures Trading at simplytrading.com, and today she's joining us to share her thoughts on the financial markets, monetary system, as well as a variety of other subject matter. So Raghee, welcome to RTD.
Great to be here. Thanks for having me.
Well, I appreciate you taking time to sit down with us and share your thoughts. And so you're in the Forex trading sector, and so that's one thing I'm not too well versed in, but looking forward to learning some things, as well as getting your take on how you manage in that sector, as well as your thoughts on the impacts of currencies in the long run. But before we get there, can you give the viewers a little bit of your background and how you've arrived at this point in your career?
Sure. So I started trading futures at the age of 15, and I basically caught the bug pretty early. And the easy thing about starting early is, you don't have much to lose. Ignorance is high, and ignorance is bliss, until finally your first, couple tough years. But fast forward to where I am right now, about 32 years into a career that spanned everything from futures to Forex, stock options, and crypto, you name it. If it moves with some liquidity, I'm there. So in terms of Forex, at the end of the day, I think a lot of people probably know more about Forex than they think. If they've traveled abroad and you've taken dollars and you exchange them for euro, there's your first Forex trade, and it's just trading money for money. So I'm stoked to have this convo.
All right, sounds good. So definitely, that's one thing that I've had a chance in my former days of doing some traveling, and so what got me into rethinking the dollar, as I put it, is the fact that having lived in Argentina and exchanged pesos for the dollar, I've witnessed the peso dwindle to virtually nothing in regards to my standards, but it impacts a lot of the people there. So I still keep in contact with, and it's just things that concern me. But we'll get into that. And so as of this current moment, what are some things that concerns you? What are some things that you're probably witnessing when it comes to your sector that has you concerned or alarmed or whatever it might be?
Well, I think one person's concern is another person's trade, right? One person's fear is another person's opportunity. So I think I always look at it from the standpoint of my sports fans out there. I'm always on offense. I don't care how much I'm leading, I'm going to air the ball out. So if there's always going to be an opportunity in the currency markets, it's really interesting, because unlike stocks and futures, you're always simultaneously buying one currency and selling the other. So if I'm going to be long US dollars, for example, I'm going to buy dollars but sell euro, because it's an exchange, right? So we know that there's no such thing as having a pocket full of dollars and being able to or not having a pocket full of dollars and being able to exchange for something else. It's always a process of that. So as long as people can conceptualize what pairs trading is, that's really probably the biggest mental hurdle to get into currencies. So right now, I think a lot of folks are concerned about what it is that Christine Lagarde and the ECB maybe deciding about the euro and the slowdown in Germany, and really how the coronavirus has exacerbated that slowdown in Germany. Italy was concerning because it looked like for some time in 2019 they might have been in a kind of recession or even a pre-recessionary type environment. So what can the ECB do? Can they hike rates? Can they increase the value of the euro? No way. And that is actually going to be very bullish for the dollar. So I'm right now very much, again, when I say right now, next 3 to 5 years, I'm still pretty bullish on the US dollar.
Interesting. Now, so it looks like you're anticipating the activity done by the ECB. Christine Lagarde, she's stepping into the realms now. So she's going to be, I guess, you're anticipating her activity to be very profitable, in regards to the exchange aspects of you being able to take advantage of some of their policies that might not be favorable for the euro itself, but it would be beneficial for you as a trader, is what you're hitting at.
You got it. So it's in their best interest right now, and it's in the best interest of almost every central bank, G7 or G10, around the world to keep their currency weak. It keeps their goods more competitive. I think a lot of people know the benefit of a weak dollar, and also sometimes the benefit of a strong dollar, or sometimes a side effect of being the reserve currency. And while the U.S. from a competitive standpoint would love to have a weaker dollar, we are also the reserve currency. We're the currency, for those of you that aren't familiar, we're the currency with which if India wants to buy crude from Russia, they're going to do so in US dollars. Other currencies have tried to become, say, a petrol dollar or to become another reserve currency, but nothing's unseated the dollar. And in the near term, I don't see anything really near term. I'm thinking the next 5 to 10 years, I don't think there's anything that's probably going to unseat the dollar. Not yet. But at the moment, yes, I believe it's not only smart to be short the euro, but continuing to be long the US dollar.
Now, for someone who may not have experience on shorting the euro the way you just described it, give us some beginning steps on how to educate yourself to probably take advantage or to participate. Of course, everything comes with its own risk and rewards. You're giving us your assessment on what you anticipate happening, but how can someone who has no prior experience on actually getting involved in that begin taking a step or two?
All right, so it's really easy. If someone wants to trade Forex, great. That's a really easy trade. You short the euro US, which is simultaneously selling the euro while buying the US dollar. Now, I know a lot of traders are more comfortable on the future side of things, and there is a euro FX currency. You can buy puts, you can short the futures, and then finally, probably the most accessible way for most traders, and most traders I think have access to an equities trading account, you can short something known as the FXE, or you can buy puts on the FXE, which is the Euro Currency Share ETF. Now, there's also a US Dollar Currency Share ETF called the UUP, and you could buy the US dollar against a basket of other currencies by getting long that ETF, the UUP, or getting long calls. So there's a lot of ways to take advantage of this, and even if you don't necessarily want to take advantage of this currency relationship, if you're trading anything, think about something that money is not affected by. Understanding currencies and the central banks that control them are going to give you an edge in any kind of trading, equities, futures, and of course in the Forex markets.
Interesting. Now, when it comes to trading, you're basically positioning yourself to take advantage of situations that are outside your normal person's knowledge base. And so when it comes to investing and trading, my question to you, because you mentioned earlier that you're in the stocks, you trade equities and crypto, so you trade a variety of things. Now, one of my concerns is that because of all the problems the world's facing, just the conventional model of investing, like buy and hold, like that model may not necessarily be beneficial for a lot of people, especially the fact we're at a 10-year expansion in the U.S. and the Dow's at all-time highs, the S&P at all these highs. At some point, there has to be a low. Now, when it comes to trading and investing, what are your thoughts on how has investing, from your experience, been the same throughout, or has it changed? And has monetary policy made investing a little bit more riskier these days than prior years?
The monetary policy around the globe, and it's not just the U.S. central bank, has been very favorable to people buying and holding stocks. They have literally been propping stocks up since '08 with just a sheer amount of liquidity, keeping interest rates low. That invites buybacks, share buybacks, epic buybacks. The last 3 years, and say Microsoft and Apple alone, two very heavily weighted stocks within the average, when those companies are buying back shares, they're reducing their float, their earnings per share looks better, they're buying their own stock, and then just on and on, you see this kind of movement higher. So really, I don't necessarily feel that central bank activity is detrimental to stocks, but what it does do clearly is create a bubble. And I think that's kind of what you and I are talking about here. So kind of going back to, there's always opportunity. If you keep a pairs trading mentality, a Forex trading mentality in mind, I'm always buying something and I'm selling something else. In the equities markets, think about it as water. Water is going to go somewhere. If I just dump a lot of gallons of water, it's going to find a way. It's going to find a way to move forward. And if it doesn't, eventually it's still going to win. So I look at the equity markets in that regard, where let's say we see the market really panic like it did in 2018. We don't have to imagine that far back to Q3, Q4 of 2018 and the sort of unraveling we saw in the broader averages. So what benefited, or what took it less on the chin? And we saw the NASDAQ and the S&P and the Dow literally take a standing 8 count. But what was doing okay? We could take a look at utilities. They were much more resilient, relatively speaking. Staples were much more resilient, relatively speaking. You can look at housing. Believe it or not, housing and construction were much more resilient. Gold, which you don't have to trade the futures of. You can buy the ETF of gold, GLD. You can buy the ETF of the bond market, TLT. So just because the market's, kind of, there's an outgoing tide on one side of the market, there's another part of the market where there's going to be a nice incoming tide. And I think it behooves traders and investors to understand that flow, because there's always going to be opportunity. There's never one time in my entire career, in 32 years, I went to cash, and I regret it. And that was in 08. And I said, I'll never do it again, because if I had the mentality of always looking to be on the offense, always looking to air the ball out, I would have seen there was opportunity, not to pick the bottom, but in markets that were more resilient in a relative speaking way. So now I always say there will be somewhere that I can put my capital that's going to be more resilient, and I don't have to panic with everybody else, because that panic's going to give me opportunity.
Interesting. Now, so in hindsight, now you have experience based upon what that one regret at that moment. So at this current moment in time, all-time highs and led by central bank and buybacks and things of that nature, in your personal opinion, are there any other sectors that you're seeing that is signaling that perhaps we are at the top, or this thing just beginning as far as how high as monetary policy can take it when it comes to the PE ratios of equities? Like right now, like this, it seems like it's no end in sight. And so is there anything else that you might be seeing on the outside that could say, hey, any minute now we can have some issues?
Sure. Yeah. So if you're looking at right now, I think, let's talk about 2020 and the election coming up. Again, I never believe politics is profitable, but there are certain psychologies and certain patterns that election years will bring. I typically won't want to be short an election year. The incumbent is going to be very well, wanting to do everything possible to keep the stock market rally going. If you look at the central bank activity, they too are doing their best to keep corporate debt levels from just imploding. If you look at corporate debt levels right now and the kind of repo action we're seeing from the Federal Reserve, basically, how are they keeping money cheap for the corporations that owe a lot of it, right? And that's a lot of what the central bank is doing. And the central bank has very strong, almost incestuous ties to Wall Street. You take a look at Jerome Powell, our current chair. He's doing his job, but he's also doing a job that is benefiting his he's from the capital markets.
Yeah, his former employers.
Had his teeth in the Carlyle Group. There's no doubt he's a smart guy, but we always have to wonder, what is their objective? And I think assuming their objective is always to help the common American is probably a little misplaced. So without getting too into that, right? It is a tough job, clearly. But for me, it's going to be basically, if I am looking at a top in this market, it's going to be after the election, not before. If we are looking at topping action, for those traders and investors out there who look at charts, there are patterns that tend to accompany those types of downturns. It's typically what's known as a distribution market, where we don't keep putting up higher highs. We actually start to move in a sideways chop. The narrative about the markets are going to shift. Rather than ignoring the macroeconomic slowdown, which this market has been doing very convincingly for 2 years, that conversation will become the predominant conversation, not ignoring a negative, another miss on the ISM, not ignoring another lacking, earnings season, but rather making that part of the conversation, which we're still not seeing. And another thing we have to look for, and this is probably the most important, and Stan Druckenmiller, who is the GOAT of traders, he basically said, it doesn't matter what the fundamentals say, just keep an eye on the central bank. And as long as the U.S. central bank continues to expand the balance sheet, I wouldn't look for a downturn. And you can track that through the central bank. This is not a secretive thing that they do. You can track that through their very own data at federalreserve.gov.
Thanks for watching this interview. If you're enjoying content like this, feel free to become a part of the RTD community by becoming a member via Patreon. All it takes is a monthly contribution of about $5 a month for more great content such as this. Just scroll down beneath this video here and click the Patreon link, and then hit this tab right here to become a member of the team. Looking forward to bringing you more great content. Now, let's get back to this interview. Thanks. Yeah, so keep an eye on the Fed. Basically, if the Fed stays in the game, you can anticipate more of the same. And so one of my concerns is that this whole health situation that's underway now, based upon activity out in the Asian region, a lot of people mention the black swan event, or something that can prick the bubbles, because if everything is overly inflated and propped up artificially, then there's something out there that's going to prick that. So the recessionary talks. No, so like in a recession, given the fact it's been prolonged, this next correction will be opportunities if you know what you're looking for. So I'm assuming you are ready and strategizing how to benefit and to take advantage of. So for your average person who has no trading experience, no knowledge of investing, because they're passively investing as far as turning their funds over to somebody else, they have no clue what's going on. So a lot of the viewers are heavy precious metal enthusiasts, few crypto people in the mix. And so from your standpoint, this health situation, will this impact the markets in an unfavorable way, or is it all still dependent upon QE and central bank policies or whatnot?
Okay, there's a lot to unpack there. So I think the first thing is to differentiate between trading and investing. So if I'm going to trade, I'm simply looking in the most basic way to buy low, sell high, or buy high, sell higher. I'm looking really for price movement, and typically in a shorter time horizon.
Shorter time frame.
Although, clearly you can have a 20-year trade if all you're looking is for that price differential to take advantage of. Investors, of course, are doing what? They're trying to continually add to their portfolio. Their ownership is really the driving force there. And so differentiate the two objectives, which I like to do both. Clearly, I have my trading bucket, and when that overflows, it goes into my investing bucket. So my investing bucket still is very much the way it looked like in Q3 of 2018. A lot of GLD, a lot of TLT, a lot of UUP, a lot of utilities, XLU. So the passive investing, the ETF world, is actually wonderful for your retail investor, because it gives you a very inexpensive way to have exposure to parts of the market that before you had to buy a mutual fund and pay clearly larger fees for. So I'm a big fan of ETFs. Most of my portfolio, clearly I've managed my own, and I use ETFs for a lot of it. I think the biggest warning I could give folks that are wandering into ETFs is always know the holdings. I think a lot of folks, if they were to look at holdings and say XLC, XLK, and QQQ, three very popular ETFs focused on communications, discretionary, and NASDAQ, would be shocked to find out how much overlap they have. So a big thing, a tip that I give most of, it's not even a tip, this is right, what everyone should do. What do I own? Not the ETF, what is inside the ETF, what stocks and what are their weightings. Most ETFs have high concentration weightings, meaning very few stocks make up most of that ETF's movement. So that's one thing. The other thing is also, if we are looking at topping action, which I don't think we are, not yet, where can you go that's going to be more resilient? Going back to our conversation earlier, and that's going to take you back to gold. You mentioned you have a lot of metals fans, a lot of gold bugs. I think that's something that makes a lot of sense to hold, to be in gold, to be in bonds, to be in dollars. And then if you look at the resiliency there, not that they're going to be impervious to it, but you look at the resiliency there, it's one way to build a better portfolio for that potential for a market rollover.
Interesting. Now, and so a lot of people, and so in the alternative media space especially, it's the saying that if you don't hold it, you don't own it. And so if everyone is involved in some type of financial product, and so I've had guests on that says, stay away from ETFs because you don't know how long, who owns it, if you can get it, and what they actually have, what they say they have. Get something that you can physically hold. And so that's from the investment standpoint, given the fact that a lot of people are concerned with the long-term effects of all this QE stuff. And so looking ahead, when it comes back to the currencies? You mentioned earlier that the you don't see the dollar really being removed or having issues for quite some time. Now, when it comes to the cryptocurrency sector, I'm curious to get your thoughts on that, because a lot of the stable coins, you got people talking about the Fed coin and all these alternatives that we're being transitioned into a digital world by default anyway. What are your thoughts on this moving into the solely digital age? And then how's the crypto sector to use that? I mean, clearly there's opportunity there. Do you see that as something as a viable asset class that's here to stay and will grow more?
I'm a big fan. There's an inevitability to it, right? I'm not going to be one of those folks saying there's not inevitability. We're just early, you know. I don't think it's done. I think a lot of people just don't realize how early we are in this transition. And so blockchain is going to revolutionize everything. I think anyone who doesn't accept that is just burying their head in the sand to, I think, inevitability. So to say blockchain isn't the future is just, without a better word, stupid. I think absolutely. I'll tell you exactly my relationship with cryptocurrency. Number one, I think it's digital Forex. I'm already a fan of currencies. Now I'm trading digital currencies. Liquidity is clearly, always going to be something I look for. So just like I would not trade minor currencies, I'm not looking at the minors within countries that don't have a lot of liquidity in their currency. I'm trading the majors: Canadian dollar, Comdols, Canadian dollar, Australian dollar, New Zealand dollar, US, euro, pound, Swiss yen. We have those equivalents, I think, more liquid, kind of accepted, G7, if you will, type cryptocurrencies. And, clearly we can talk about Bitcoin. So back in 2016, they were confiscating rupees in India. And my family is from India. And I was talking to a cousin of mine. He said he was buying Bitcoin. I said, well, why? I had some, but not a lot. And I think Bitcoin was trading in the mid 400s at the time. I said, why? I said, well, they're confiscating rupee. But all right. And then, of course, the election was coming up. And anyone who was trading currencies at the time noticed the way Bitcoin moved, the Mexican peso moved, and the US dollar moved during every single debate. Every mention of Mexico, every mention of the wall, you saw those currencies move. And I thought, there's something here. There's flow, right? I'm a trader. I'm going to look for where there's flow, where there's volume, where there's conviction. And I saw it in Bitcoin. So my cost basis is a very nice cost basis. It's sub $450. And I have no intention of letting that go. I have a great cost basis, and I believe in the future of that. Not necessarily Bitcoin, but blockchain. So I know it's a completely different conversation. There's experts that know far more than I do, but I treat it like I would Forex, and I'm treating it in that way. And it's been good to be open-minded about these things. And folks who aren't open-minded about where flow is going just don't understand trading. And I think this is just another tradable market for me.
Interesting with flow. I like how you mentioned where flow is going. So definitely, I personally am of the mindset that it's a part of our future, and it's in its early phase. And so from the trading technical standpoint, when you look at graphs and charts, we've reached close to 20,000 2 years ago now, give or take. And so a lot of people are saying the halvening is coming soon, and they're anticipating another spike. So can you see, and would you say Bitcoin reaching so Bitcoin itself just being the primary, cryptocurrency, the origin of it, can you see it going to that $100,000 $1 million by sheer volume of interest, or panic from world issues, currencies, or can you see it taking off in that standpoint because of issues, or just naturally you think it might get there just because people want to get involved in the industry or sector?
Okay. So here's the way I look at my personal trading. I mean, clearly you have a lot of guests, and a lot of guests will look at projections. So I look at trading, for you boxing fans out there, as counterpunching. So I'm not going to be dictating the pace of the fight. I'm going to let my opponent show me the openings, show me their tendencies, fight IQ, right? I think there's a trade IQ. And so I'm always counterpunching. I'm not looking for what that target might be, because the path there could be an unaffordable one. So for example, let's say Bitcoin's target was 250,000 back when we were heading to 20. If the path to 250 went to 7,000 like it did, if that drop is unaffordable, that's not even a trade that's viable for most people, to lose nearly 2/3 of the value of that, whatever that is. So I think there has to be the realistic understanding that if you're going to do something on margin, or if you're going to buy something at the top, you've got to ask yourself, what would a 50% reduction in price mean? Can I still hold on to it? So sadly, we saw people who didn't accept the risk of a $20,000 going to $10,000 cut in half going, well, I can't afford that. Then that 20,000 entry as a trader was unaffordable. So the path to 250 or the path to whatever it is, I think we are going to go higher. But as a trader, again, I'm counterpunching. And so if we can't take that scenic route to 100,000, to 200,000, it doesn't really matter, does it? Because we weren't able to hang on for the ride. So all that being said, are we going to see higher highs? I believe so. The path there, I couldn't even begin to tell you what black swan event or what kind of event is going to get us there. But I think it behooves us as traders of Bitcoin to focus on those specific price points. And it's going to be individual for all of us to say, where can I afford to be wrong from? And when I reach that price, buy it, and not before that level. Because that way, if your faith is it's going to head higher, which I think it will, you can hang on. And anything less than that is really going to be something that won't help you. Getting to 250, if you can't afford the drop to 7, a lot of people already experienced that.
Wow, interesting. Well, wow, so I've learned a lot. I've definitely learned a lot. I appreciate you taking time to join us because you threw out a lot of buzzwords, flow and following volume, and it really has me thinking more of like the importance of taking a trading mindset as far as not being overly committed to anything in particular, but being willing to adjust your allocation to it according to opportunity that present themselves, in a sense, if I was to sum that up correctly.
You're exactly right. Can I afford to be wrong from here has got to be the dominant thought. You got it.
Yeah. Well, Ragee, it's been great having you here on RTD. Can you point people back to your direction so they can find out more about your work and perhaps follow and get involved or whatnot, whatever services that you happen to offer?
Sure. Well, I'm the managing director of Forex and Futures over at simplertrading.com, and you can head on over there and check out my work. But you can find me also in all the normal places, Instagram, Twitter, Facebook, and it's all at Raghee Horner, my first and last name. So however you want to interact, but most, my work and my research is over at simplertrading.com.
All right. Well, thanks once again for joining us for RTD. Looking forward to following your work and definitely having you on back down in the future and getting your thoughts on some trading activity and definitely continue to educate myself. So once again, thanks for joining me on RTD.
Thank you.